We have Mayuresh Joshi now joining us. Hi Mayuresh, welcome to ET Now. Banking stocks were taking a backseat, but even today Bank Nifty has hit an all-time high. We are also seeing PSU Bank making comeback. Now, one theme is very clear that one should prefer private banks, and within private banks also a bank which has more of retail book, that should be a better investment. But what about PSU banks? Because Can Bank numbers surprised markets, and since then we are seeing a decent rally which is taking place in PSU banks. Let's down for our viewers, if at all you feel that there are these PSU banks which can show an improved asset quality and decent growth from current levels.
Afternoon, Siddharth. Yes, I think Can Bank's numbers probably gave some amount of fire to PSU banking stocks in general. But a large element of the underperformance has been related to asset quality issues, higher provisioning, the credit growth not picking up, and lack of capital adequacy. I think all these four elements have not only dragged the return ratios substantially, but again I think have not given any justifications in terms of their price to book or price to adjusted book, which for a large element in terms of the broader PSU banks have stayed below 1. But again, I think in terms of a large part of the recognition, and the Bank of Baroda numbers in the evening will also give a definitive trend in terms of the parameters going ahead, specifically in terms of asset quality trends. I think reported numbers by Vijaya Bank, in my opinion, have probably stood out. If you look at the net stressed asset book, it stands around 7.76%. I think there is minimal stress that can get recognized in terms of either the SMA or the overall MSME book. So yes, provisions might be there, but it will be far lower over the next few quarters, which basically means that the GNPAs and NPAs reported will also be far lesser than what you've seen in this quarter. The second element in terms of the retail book actually picking up, along with qualitative aspects of their SME or the corporate rated book picking up, and the other element of the capital adequacy being far better than others at 13%, probably will hold out. So we have to pick and choose within PSU banks. I think State Bank becomes a consensus choice. Within the broader universe, I think Vijaya Bank, in my opinion, can probably stand out.
Thanks, Mayuresh, for that.
Mayuresh Joshi joins in with his perspective on the markets. Mayuresh, thanks for being with us. I know you've been waiting for a while. Give us your sense on how you're going to be placing, how this earnings season has panned out in terms of individual movers and sectors per se. Which to your mind have stood out?
I think if you start with the IT numbers, I think IT companies did post a very good set of numbers. And the commentary was equally supportive. So when you're looking out for definitive trends, both in terms of client transformational deal wins, that have probably come through on the digital side. And the other element in terms of BFSI actually having green shoots being displayed gives a respite in terms of the earnings trajectory, both in terms of constant currency and the dollar revenue growth. What you've probably seen in terms of visa cost, wage hikes play out on the margins, there should be a definitive improvement in the second half. Itself will mean that the earnings trajectory for a few companies out of the large and mid-cap spaces will continue to do well. Cement companies on a whole have probably reported a very good set of numbers. So where the concerns were that margins will deteriorate significantly because of higher power and fuel, and again diesel costs because of increased freight rates, you've probably seen them getting offsetted by the optimization of the other expenses on their balance sheet. The volumes have been pretty strong, and that leverage has clearly played out in terms of an EBITDA per ton and the return ratios displayed by cement companies. Now going forward, as utilization levels keep on improving with minimal capacity getting added for the industry as a whole, and because of the optimization efforts, along with the news that you're probably hearing, that if GST is probably brought down, that will affect volume growth even further, with government spending continuing significantly in terms of affordable housing, both on the rural and the urban side, as well as what you've probably seen in terms of infrastructure development. So cement as a space has also probably held out. The private banks probably were in line with estimations, but a large element in terms of the management commentary, specifically towards retail advances growth, and with growing straight expected to come out from the retail book, and the corporate MSME and SME book also improving, gives confidence in terms of the private financials to both in terms of retail-oriented and a few of the corporate-facing banks are actually expected to do well. So I think a few of these sectors did stand out. A few of the capital-intensive sectors are probably disappointed because I think the expectations in terms of how the execution parameters will be and the cash flows on their balance sheets still needs to be defined in terms of a consistent trend. So L&T probably just stood out within this entire pack. But I think these other sectors probably, in my opinion, have stood out. Otherwise, I think it's a mixed bag so far.
Thanks for that opinion, Marish. Marish, my question to you is more stock specific and, or I would say more thematic, and that's an agri theme. A lot of people have, thought that there would be rural economy thrust and that would lead to consumption stock doing well, and I'm not referring to FMCG names over here, more agri names. So my question to you is on Godrej Agrovet, and if I'm not wrong, this was one of your recommendations, that stock is doing fairly well for itself, and also Jain Irrigation. What's happening, because one name has not done well, which is Jain Irrigation, and Godrej Agrovet over a period of time has managed to at least stabilize in a market where mid-caps have not done well. Your comments on these two names?
I think a large element, Siddharth, in terms of the discretionary patterns coming back, specifically in terms of the rural economy, I think still holds true. Out of the two names that you mentioned, yes, I think Godrej Agrovet over a longer period of time did manage to do well. But in terms of the dynamics going forward and in terms of the product mix itself, I see no purpose in terms of any apprehensions going ahead. So I think a large element of their product suite and the expectations of earnings growth over a longer period of time should still persist. For Jain Irrigation in particular, I think what has probably hampered the stock is the kind of execution parameters, and though they have probably started delivering on that front, I think the receivables position is something that one really needs to track very, very closely. The other element in terms of what probably happens with their food processing business, I think also needs to be closely monitored. So I have no questions about the Godrej Agrovet model. You might have some volatility or distortions in terms of near-term earnings, but I think the larger-term picture obviously stays very, very intact.
Okay, Marish, thanks for that view, and thanks for joining our channel and sharing your insight with our viewers. Dr. Narayan, Kunal Bothra and Manas, thanks to you too, as always, joining us and throwing light on how one should trade this market. Stay tuned, don't go anywhere. We are taking a short commercial break. On the other side, we are going to discuss what one should expect from ICICI and Reliance. Two very important numbers. Results are going to get announced. Stay tuned.